Welcome to Veranda Excel, and we are taking up on to chapter number 7 on mutual funds. So this chapter has got 7 units, and post that we will be taking up problem solving. So the basic learning of mutual fund is very important in the successful understanding and implementation of our knowledge. What I am trying to say is that one should have a good theoretical background, and only then he will be in a position to apply it properly. So many a times students generally talk about mutual funds, but what they lack is that they do not know what is mutual fund, how it is formed, what are all the background I would just say forces which really enabled to get that mutual fund into existence. So the background of this mutual fund, firstly let us just learn. Only then we will be in a position to understand the remaining concepts. So therefore I take this opportunity to explain it through Windows Journal. Now let us just proceed there. Say, what is basically a mutual fund? See, for this I would just give an example firstly as how I have experienced mutual funds in the early part of my life. Only then the concept of mutuality can easily be visualized. So for this case I have to convey a story. Story means it is not a spun story, it is real story. We had in our neighborhood one gentleman by name TCS Krishnamurti. This gentleman TCS Krishnamurti was just 3 doors away from our place. This gentleman was working for Indian Bank. He was in the clerical cadre and he was about to get into a promotion, but he never wanted to go out of Chennai, so therefore he declined all this promotion, but he was actively involved in employees' welfare. What he would do is that, so he will ensure that all employees are getting at a cheaper rate whatever they want to buy. For example, during this Deepavali season, the crackers are to be bought from a local shop. Definitely the price that you pay to this local shop will be greater than what you could get directly from the factory, that being Sivakasi. So since he was working in Indian Bank, the local Indian Bank of Sivakasi was contacted, and who could be a better supplier to supply these crackers. So this gentleman did not think about his family alone. What he did is that, so he talked to that manufacturer, so we are all Indian Bank employees and we are so many people, and our worth of order is going to be so many lakhs of rupees. I am talking about during 70s and 80s, especially late 70s I would say. So he had gathered all the information from the employees. To them he had just distributed the price list, because he had secured the price list from the manufacturer directly. See, a manufacturer should be feeling very happy that some employees union of a nationalized bank is placing an order, would mean definitely the price would be cheaper. So what this gentleman did is that he did not order for himself or for his family. So to all members in that particular street, whomsoever he knew, so to them also he distributed, because he felt that there could be a lot of middle class people who would be there. They will also have the same feeling as he was having. So my dad also subscribed for that. So, and we used to tell, this is what this cracker you got to buy, this you should not be buying, all that. We prepared a list. I remember it was some 40 rupees or so by that point of time, which was considered to be very great. So like this, lot of families have just gathered, and this gentleman firstly thought that not many employees will join. So he himself gathered around 25 families in the neighborhood, presented as his own, and this way every such employee did in Indian Bank would mean look into the order size. order size was something very great. And he effected the order, and in 2 lorry loads it had just come. He had put up a very important condition to the manufacturer that he should pack it in such a fashion that it becomes very easy for distribution, because the moment he is dumping, then distribution becomes a problem. So with the lorry load, some employees were also sent, and they have enabled that each family is getting in their pocket. So in this process, what Mr. Krishnamurthy did is the one from where I just learnt this mutual fund. If the price is to be X, what he did is that he had added some Y, because to pay for the lorry and to do all this job and to carry out this administrative job, because he has to take printout and do all this function. By that point of time, it was not like printout, it was cyclo-styled version. We have to type it out, and definitely some costs were also involved. And the cost from where he has got to recover? Only by increasing the price. So X plus Y is equal to Z. He collected Z from all. And how much he paid to the manufacturer? He paid only X to the manufacturer. The Y is not a profit that he intended. So the estimate what he had made, that actual expenditure could be Y. So in fact, he is a very conservative person, therefore he had inflated the expenditure, and every person paid so much of money. My dad paid 40 rupees. So ultimately, against my dad's share, it came only to 36 rupees. For 4 rupees extra amount he charged. So what he did is that for 4 rupees, he had just purchased some utensil or something like that and gifted back to all the members. So members were very happy on 2 counts. Number 1, the crackers can be bought directly from the manufacturer at a price lower than what you could get from the local shop. Then number 2, he has got a gift. So 2 things for which he was very happy, and Krishnamurthy's hand, that is, I will call him as Uncle Krishnamurthy's hand, was clean. He did not retain 1 rupee to his pocket. He did only for the welfare of all in our neighborhood, all in his Indian bank. My dad did not work for Indian bank, he worked for postal department. So the point what we want to tell you is that imagine that the same thing is what you find where we form as a group and all of us contribute money. With that money, what is it we do? We purchase shares in the market and we sell also shares. Thereby you get profit. By holding the shares, we were getting dividend. So 2 things are happening when you are doing it collectively. Number 1, the dividend you are getting. Then number 2, you are getting the capital gains. What is the capital gains? The difference between the selling price and the purchase price, you make profit. So you get dividend, you get profit. Both the items, what is that we will be doing? We will distribute amongst all the members. So in this particular case, the principle of mutuality, what I have explained with the example of Krishnamurthy uncle, the same thing is what mutual fund is doing. So now to create that mutual fund, there should be a person available. In this particular case, Krishnamurthy uncle did. In the case of mutual fund, there should be a sponsor. And this sponsor will have idea. People who are having idea, they are not winners. So people should have idea as well as resource. So idea plus resource will become a new activity. So a person who is dreaming, not having resources, it is there only in his dreams. A person wanted to buy a car. I was just dreaming to have a car. I was only dreaming. At one point of time, okay, I felt, okay, I have enough amount of money to pay for the margin. The remaining portion we can take up as loan. And I have just bought my first car in 1996, that being Maruti 800. So that becomes an activity. So then people told, okay, Murali has got a car. So therefore, 2 things are very, very important. What are the 2 things which are very, very important? Number 1, idea. Number 2, resource. So there should be a sponsor. There should be property for that. Okay. So if I have the idea, if I have the money, and I am doing some other business. So I can't quit that business to form this mutual fund. Then what is that I should do? I should entrust this work to an expert. So we call them as a asset management company, or generally you can call them as trustees. Correct? So number 1, sponsor. Number 2, property. Then number 3, you require people to maintain. So you call them as a trustee. Then what is that set of organization that we are talking about? Mutual fund is basically a trust. So I can form a trust. So please just understand, I have the idea, I have the resources, I will form a trust, and to manage that I will have trustees. Then the last one, beneficiaries. Who are beneficiaries? The person for whom I wanted to help. They become automatically beneficiaries. So there are 5 elements required in the case of developing mutual funds. So unless we understand the background, unless we know the principle of mutuality as how that Krishnamurthy uncle did, same way we would be doing. Please understand, the money contributed to mutual funds, we'll call them as not as shares, we'll call them as units. The money contributed by each one will be referred to as units. So the beneficiaries that we are talking about as the 5th element. Who are those beneficiaries? Beneficiaries are general public. You find a lot of salaried class people, whether they are bachelor or married persons, they will develop some amount of savings. They will have their dreams, and where they will put the money. So if you say that you are earning so much to your relative or friend, immediately they will be asking, please give me loan. This is not something like that I am telling. So I have also experienced. So I tell very clearly to close people that my hands are full. In the sense, I have already spent that money, and people will not come and ask, so you save that money, where would you save? Definitely this mutual fund is an avenue for almost all sorts of people. A person who is a businessman who has got some fortune, some windfall, he can't keep it in business, he can put it in mutual fund. So this way, the formation of mutual fund and the background of mutual fund should firstly be understood. So do not consider that mutual fund has come from Western country. Mutual fund has just come within our own system itself. So the example what I have just given about this Krishnamurthy uncle, he did a wonderful job. So wherever you have some problem, immediately people will think about, okay, you just call Krishnamurthy uncle, he has got connections. So you would just say, okay, I know this gentleman, because being a banker, he knew as from his customers where from you just get all the resources. He is an encyclopedia. So this sort of persons who are having the idea and the resources and forming a particular entity like a trust and appointing a trustee for the purpose of beneficiary can make up this mutual fund. The principle of mutuality is what you would be finding. Now let us just take up that. So I just reverently thank Krishnamurthy uncle, and who taught me this. He did not conduct any class. The way in which he was conducting, I understood, okay, this is what mutual fund is all about. So to have this mutual fund, 5 things are required. What are the 5 things that are required? You require a sponsor. The person who is dreaming. We don't want only dreamers. We want the dreamer to have resource, property. Number 3, he has to form a trust. Mutual funds are trust. They are not limited companies. They are a trust. To manage that, you require asset management company. These people are professionals, chartered accountants, MBAs, engineers, and experts in the respective fields. So this being a company, asset management company is a company. They are trustees and beneficiaries. Correct? So beneficiaries could be general public, general public, government, investors, etc. There are a lot of people you have under beneficiaries. So 5 different units will make one mutual fund. So unless you know the background, any other matter that we discuss will not go right. So principle of mutuality when we just do. Now let me take the same example. Krishnamurthy uncle charged so much of money from all the participants, okay, and he paid so much of money to manufacturers. The difference between the two, the sale value and the purchase price, can you consider that as profit? Answer to that question will be in the negative. No, you can't call. Why? Because I have collected excess and I have paid only lesser amount of money. The difference is excess money I got to return. Where is the question of profit? If I am collecting from Venkatesh 1000 rupees, saying that the activity will cost 1000 rupees, which resulted ultimately only for 950. What is that I should do? I should return 50 rupees. Can I say that 50 rupees as a profit? Answer to that question is in the negative. No, you can't call that as profit. This is the way mutual fund is functioning, and therefore income arising in the hands of mutual funds are not taxed at all, and not only that, the amount which is getting distributed to the unit holders are not taken for taxation. This being the simple logic. So don't get the impression that government is telling that it is exempt income. It is not like that, because of the positioning of mutual funds are like the one that I have just given as principle of mutuality. You find the difference between the sale value and the purchase price can never be considered as profit. It is only the excess amount that you have collected when it is getting distributed. How my dad was happy, how my family was very happy to find the crackers which you could get in the market at a higher price, you got it at a lower price. There is a consumer surplus that you have. That happy feeling was there. More than that, the excess amount he had collected, he had given it in the form of utensils or something else. I remember many such Diwalis had just been. Whenever Diwali is coming, or Diwali is what you call, Diwali is coming, I remember mutual funds which were implemented long time back by Krishnamurthy uncle. So hats off to Krishnamurthy uncle, and likewise I have just seen so many Krishnamurthy uncles in my life who did wonderful job and taught again and again the principle of mutuality, and that is what you find it in this mutual funds also. Now we will be just taking up some problems for solving, and we will be just intermittently having theoretical discussion also. Say mutual fund, unit number 1, under that subunit number 1, introduction. We had the introduction that there are 5 elements required for the creation of mutual funds: sponsor, property, trust, trustee and beneficiaries. So this being the background, one should understand as how mutual funds are created. So as in the discussion itself we have conveyed this particular matter, that the form of setup for mutual fund is always a trust. And how the trust is getting managed? Trust is getting managed only by asset management company. AMC is what we call. Generally AMC is annual maintenance contract. In this case AMC stands for asset management company. What is this company? What is that this company will be doing? Who will be running behind this, or who will be the backbone of this AMC? AMC, asset management company, is run by professionals. They are professionals such as chartered accountant, MBA, engineers, and all these people together will form a company, and they contribute something to the trust, like how sponsor is contributing, how the beneficiaries are contributing. Same way AMC will also be contributing. So their job is to manage the funds. Funds will be contributed by sponsor, funds will be contributed by AMC, funds will be contributed by general public. So the proportion of all this will be varying depending upon the participation level of public, AMC and the sponsor. Next item is return. In the introduction portion itself, I told you that the general public, when they want to participate, contribute money or take money out of that, they can't do it from other unit holders. So, one of the basic principle that the mutual fund is just running is they trade amongst their members only. Supposing if I am the unit holder, like shareholder, we call them as unit holder in the case of mutual fund. So, I can buy the units only from mutual funds, and if I want to sell, I can sell only to the mutual funds. So, what is happening in the case of shares? So, if I were to be the shareholder, I can sell my share to another shareholder and not to the company, whereas in this particular case, so buying and selling of units were to be carried out only through mutual funds. That is very, very important, which you don't find it in the case of corporates. And to this extent, we are dealing in primary market only. What do you mean by primary market? There are two types of markets that you have. One is primary market, the other one is secondary market. Primary market, where shareholder contributing money to the shares, that will go to the company. There is a transaction between the investor to the company. In secondary market, money will be flowing from one investor to another investor and company is not at all involved. That you call it out as secondary market. So, you understand that the profit what mutual fund is making is between the members alone. Buying and selling of units done only through mutual funds only. Mutual funds get their returns by holding the investments in, holding their shares in companies where they will be getting dividend, and when shares are disposed of, they will be getting their profit, all that they will be distributing amongst the unit holders. Here is the place where dividends received will be distributed to unit holders. Capital gains, that being the profit, distributed to unit holders. So, just for the sake of understanding, if the mutual funds were to get the returns in the form of vegetables, for the sake of example, vegetables will get distributed to unit holders. If the returns were to be received in the form of fruits, then fruits will be distributed. So, there will be no change in the form. How they receive, that is the way it will get distributed. So, you have that uniqueness in the case of mutual fund like that. Co-owners and sharing. So, we would be just taking up this logic behind why people need to go for mutual funds. There we will be discussing in greater detail why we need to go for co-ownership. See, it is something like this way. I want to buy a property. The property is costing say 1.5 crores. I am having only 90 lakhs. So, can I just say this, I cannot take this property. I find another person who has got 60 lakhs of rupees looking at the property whether he can buy. So, what we can do is that we can pool this resource and buy the property and take the first floor myself and the second floor to the other gentleman, and we can keep parking, and one can have access to that property even when you don't own the entire money to buy that particular property. So, quite naturally, when many people are joining, definitely we can achieve better results than being as a single investor. So, co-ownership makes our investment capacity to a higher level, and definitely the benefits can be shared easily. So, mutual fund is providing that. Next, indirect vehicle. So, that's buying and selling and making profit. Whatever we have just covered in the case of return is also in an indirect way. If I have to buy, I got to pay capital gains tax as an individual. If I am doing it through mutual funds, the tax liability what I could have paid is eliminated. So, that thereby the fruits of buying and selling I could enjoy, but I can do it only through mutual funds. Then for all these functions, this asset management company will be charging fees, because they should be highly paid, because they are highly rated professionals and they are delivering the products also. they are in a position to satisfy their investors. So definitely that not only the income that we share, even the expenses also we share. The next, this slide is going to help you as how the money is taken up from investors and how they are getting distributed. Now, let us just take up subunit 2, which will communicate something about the benefits of doing it through mutual fund. Say, investing in mutual fund is an expert's job in the present market scenario. So, one cannot be an expert in all the fields. Say, I am somewhat good in the case of strategic financial management. Can you ask me to take class on law? So, to some extent I can manage for 5 minutes and 10 minutes on law based on insolvency and bankruptcy code, which I qualified very recently. I can talk about that 5-10 minutes, and beyond that I cannot. So, definitely a person has got his own bandwidth very much limited. He can't be an expert in every field, but you can have experts coming up in one particular platform, and that being asset management company, and where they would be rendering the services to mutual funds, and what you cannot do individually, you can do it collectively. Then a systematic investment in this instrument is bound to give rich dividends in the long term. Quite natural. So, we will normally be telling in every Indian language, person who is a little more patient, he will be getting more returns, is what we call. So, whether it is in Tamil, Malayalam or Telugu, Kannada or Hindi, Sanskrit, so this is what you consider. A person who is having that little more extra patience will be getting greater returns. So, a person who is very anxious, not having the capacity to wait, naturally you will not be getting that fruits, and that is possible in the case of mutual funds. The next, that is why we have 2 crore investors having a faith in mutual funds. This being the logic as why many people just go for mutual funds. A person may have expertise, but he is not having the time to use his expertise for his benefit. Where would you go? Only to mutual funds. So, I would put it like this way. A person should be having money, time and knowledge. 3 things are required. A person who is having money but not having time and knowledge wanted to multiply his money. Where would he go? Only to mutual funds. Then T. So, this is what I remember this way, MTK. See, I remember from my student time onwards, MTK stands for a cinema name, made it into short. I will use Tamil word for a brief purpose. Mella Tirandadu Kadavu. MTK. M stands for money, T stands for time, K stands for knowledge. So, money is what they want to multiply. So, where would they go? Only to mutual funds. So, a person having money but not having time and knowledge, go to mutual funds. 2. A person who is having time but having no money and no knowledge, definitely he can learn by observing what they are doing in mutual funds. In fact, I will put it this way. So, person who is having only time, he should not be whiling away. He should definitely generate the knowledge and join the mutual fund as portfolio manager. Next one, a person who is having knowledge, not having time and not having money can be an advisor. So, this is where a person is having only 1 and not having 2. Now, I will take up the case, person having 2 but not having 1 in MTK. A person is having money and he has got the time but has got no knowledge. So, what is the meaning in having the money and the time with no knowledge? It is a waste, no. So, you should not allow that money to be there without knowledge. Then what is that they should do? They will put it in mutual funds. People who are there as experts, they will be in a position to enable you to get more money. Then second scenario, what is that? A person is having money and knowledge but not having time. when he is not having the time, then how is that he can multiply? So quite naturally, the only place is mutual funds. Now let us just take up a person who is having time and the knowledge but not having the money. So definitely he will join mutual funds and he will become a portfolio manager. So in all these cases, so far as this session is concerned, when we are discussing about mutual funds, we will all be telling all the roads will lead to mutual funds. But there should be a logic. We should not be telling that mutual fund is much better than any other form. But we need to know why it is much better than other entities, and for which we had given lot of examples. And let us take up the third sort of scenario. A person who is having all the three. He has got the money, he has got the time, he has got the knowledge. Of the three, I consider the last one is very, very important. You ask a person whether he has got money, he would say, no, I don't have money. You ask a person whether he has got a time, he will say, I don't have a time. You ask a person whether you have a knowledge, you will just get offended. You will not say. So in Tamil we can easily offend a person, arivu irukka? So a person will just get offended. So generally specialist knowledge, I would say I don't have a specialist knowledge on law, but I will never say I don't have knowledge at all. Even if you have all the three, what are the three items? Money, time and knowledge. Even if you have all the three, but you can't have that much of money what a mutual fund could have. So with that much of money mutual fund could have, it can achieve much greater heights than a person who is having some amount of money, some amount of time and some amount of knowledge. So quite naturally, even if all the three were to be there, it is always better to invest in mutual funds. These are the benefits that you derive by putting the money in mutual funds. Now, how it works? How it works? As I told you that Krishnamurthy uncle example, that is the way it is working. Pool the savings of number of investors. That is what. See, don't have a feeling when you study that something mutual fund is something new that you got to study and all that. So think of Krishnamurthy uncle. For you people, you would not have just seen this Krishnamurthy uncle, but at least you would be having the idea about one Krishnamurthy uncle did like this. He was not very famous and all that, but he was very much liked by, he is a likable person in that locality. So please just learn from things which we already know and don't consider the destination that you have to reach is very tough and all that. Is very, very easy. The most suitable investment for the cautious investor. So quite naturally you find there are three types of investors you have. Who are those three types of investors you have? Risk averse. So they will be having fear. They don't like risk at all. Another person will be always risk loving person, risk seeking person. Third type, you would be finding he will neither be risk seeking nor risk averse person. So it is all something similar to that of what you have in the belief of God. So there are three types of people. One who is a believer of God, other one who is not a believer of God. Third, he is not knowing whether he is a believer or non-believer. So he is falling in between. So we understand in this particular category, risk loving, risk averse, risk neutral. So the risk averse people who is having money not knowing how to protect. So for him the best bet is put it in mutual fund. In all this discussion on mutual fund, finally I will be concluding, put the money on mutual funds. I am not an agent of mutual fund. So I am just only trying to tell what is mutual fund all about. An opportunity to invest in diversified, professionally managed basket of securities. We all have a very, very famous adage. What is that adage? Don't put all the eggs in one basket, even though I am a vegetarian, but the adage for which I cannot change. Or I would just say, don't put all your tomatoes in one basket. What is the reason? Don't put all your eggs in one basket. So if that is getting failed, the entire egg will just go off. So I do not know how it will get spoiled and all that, but people tell. So all that you get at a very low cost. You can put it in diversified, professionally managed basket of securities But all that for which if you have to do individually, it will cost you heavily. Whereas if you are doing it collectively, it is all possible at a very, very low cost. So, and you can have your investments in at variety of places. So, the same Krishnamurthy uncle's example only, you can just bring all varieties of crackers because you are doing it directly with the manufacturer. If you go to the local shop, it all depends on the storage space that he has got. So, we had that facility and all that, same thing it is working out. Who can invest? So, who can invest? Venkatesh can invest, X, Y, Z, anybody can invest. There is no limitation. Even a foreigner can also invest. What is the problem? So long as the money is just coming to the system legitimately, it is all possible. Anyone, anybody. Then the next important thing is that what are the operating features of mutual funds? Then people would be asking, what is the operating feature? We have invested by a fund manager. What is meant by a fund manager? They are all part and parcel of your asset management company. They would just do that action of investing, disinvesting, timing of investment, and we all know that this market is operating 24/7 by 365. How come? So, when your market is open only for some period of time, that doesn't mean the market is sleeping. Market is operating in other parts of the world. What is happening in other parts of the world will be affecting our Indian market also. So, we should be working 24/7 on 365. An individual investor cannot do, but mutual funds can do. So, depending upon scheme stated objectives, what is that? So, you have equity fund, you have debt fund. That means equity fund would mean investments will be made only in equity shares. Debt fund would mean they will invest only in bonds of other companies or debentures of the other companies. That is the way. It all depends on what scheme in which you make that investment, and the cost and the income will be shared by unit holders. Now, should we invest in stock or mutual fund? So, as we discuss everything for today or for this session as mutual funds, we will all be telling that need to decide what kind of investor you are. As I told you, investors are of three types. Whether you are risk loving or risk averse or risk neutral, it all depends on what type of person you are. So, if a person is believer of God, to him I can talk about God. If a person who is not believer of God, I got to talk something about God, so that he will argue that there is no God. So, we will have a good discussion. So, please just understand, we can't be just telling you please just take paracetamol for this. Paracetamol to be taken only doctor can decide. How doctor will decide? Based on that particular malady reported by the patient. So, therefore, one cannot be telling that crocin or metacin should be the medicine for COVID. So, one cannot tell. So, it all depends on the investor's attitude towards risk. So, generally we would say invest in 15-20 securities. You diversify the risk by investing in variety of securities. But when you have only a small sum of money, say 5,000, with 5,000 rupees, you can't just do like that. But this is what I was just referring. Remember the familiar adage, do not put all your eggs in one basket. So, that is the reason as why we say that invest in 15-20 securities generally. It is not 15-20. It can even be 5-6 depending upon the size of the portfolio that you have. And we need to be very much pragmatic. Pragmatic means we should be very practical. We should not be talking only ideals. So, in the early morning when you start the work, so you should not be stopping empty stomach. You have to have something. So, what our elders have just conveyed, we are all very much pragmatic only. So, just at the very young stage, people avoid this breakfast. So, what they would face in their mid part, that is middle of their life, they will not be knowing what really cost. If they go back to their younger times, then they would be understanding so much of breakfast that we have skipped, we are ending up into so much of a problem. So, all our elders were very much practical. Similarly, In this case also, you find with 5,000 rupees, you can't be just investing in 15-20 securities. So, you need to be very much practical, and it will be impractical to invest with only 5,000 rupees across many stocks. And one more important thing that they say is that when you have lesser amount of money for investment, don't look for smaller level of stocks, because the level of going up and coming down will be very less, and chances of making profit is also on the lower side. We do have a lot of maxims or rules that we have, and sometimes what will happen is that the brokerage that you pay for every time that you buy and sell will eat away your much hard earned income. So, investing in funds would be easy to build your equity portfolio, and this particular plan, systematic investment plan, is normally recommended across all investors, whether they are high income, moderate income or low income. Have the time to pick stocks. See, investing is not a small job. You need to know where to invest. Right investment is very, very important. It is not like throwing your money just like that. You got to carefully do that. Are you having the time to study about the company and make that investment? So, you may have the time. Are you having the knowledge? Next question. This is what I was just referring about MTK. Are you having the time? If you have the time, are you having the knowledge? So, all that are big questions, and we are expected to, having invested, we are expected to continuously monitor the stocks that you have picked up and make changes. What do you mean by make changes? If it is not doing good, so you sell it off and put it in better stocks. So, you should be in a position to have the quick reflex of doing it. Next one, can you bear expenses as capital gains tax? If you do of your own, you got to pay capital gains tax. Are you prepared to pay that? Best is when you put that money in mutual funds. Professionals will take care, and your money will not be taken for taxation at all, and it will be exempt in your hands. Mutual funds would be the best avenue for risk-averse investors. So, this is what you got to consider as part of the first unit, and the rest of the discussion and the next units we will be taking up in the next section. Thank you.